All right, Bitcoin's bouncing today. It has been a shaky start to the year, to say the least. Our Tanea McKeel says it could be a tale of two crypto trades under incoming President Trump. She joins us now to explain. Hi, Tanea.
Hey, Scott. Yeah, that shakiness could definitely continue through the first quarter. That's what traders are telling me after tariff concerns dampened enthusiasm this week. Remember, crypto is, of course, one industry that stands to benefit this year from a pro-crypto White House and Congress. So Bitcoin rallied more than 45% in the month after the election. So on the tariff concerns, that's a theme that extends beyond Bitcoin, but it highlights these two opposing aspects of the Trump crypto trade now coming into conflict. So on one hand, the promise of better regulation that could help crypto companies versus parts of the agenda like tariffs that could strengthen the dollar but then weigh on Bitcoin price. Those two things have an inverse relationship and, of course, introduce risk to markets broadly. So a choppy quarter ahead before Bitcoin makes a run at a new record. But I don't want to overstate the risk long term. It's been a year today since the approval of Bitcoin ETFs, and I'm told their popularity combined with better regulation could still support a doubling in Bitcoin price this year, and that the market should feel confident that Congress is going to take up crypto issues like stablecoins and or market structure. But even there, the impacts may not be felt until the end of the year. Scott?
All right, Tanea, thanks for setting that up for us. Appreciate that, Tanea McKeel. You want to talk about that, Bill?
Yeah, absolutely. We own Bitcoin, IBIT, in portfolios, and we actually are looking to add to that at some point here over the next month, increase the positioning. It's right around just under about a 1% holding. I also traded in the futures as well. And, I think what we've seen here, obviously this big run up and a nice, healthy consolidation. On one hand, I think this, in a technically bullish market, you get a pennant building the way it has, and it leads to higher highs. On the devil's advocate side, the only concern I would have here is if we get sort of a buy the rumor, sell the news from the inauguration, and we get a little bit of a shakeout of weak hands, which actually wouldn't be so bad. You shake the weak hands out, and then you make the next move higher.
I think the key thing here is a little bit of be careful what you wish for. For like 5 years, one of the biggest catalysts for bulls was that at some point we're going to get crypto ETFs. And then, of course, that day came a year ago. IBIT, BlackRock's product, became the most successful ETF launch, any asset class, in the history of the ETF wrapper, and got up to like 54 billion. What happened last week, though, was its first really big daily outflow. 337 million came out. I think all of the Bitcoin ETFs in total are probably negative 2 or 3 billion since middle of December. And now these are financial assets. So I don't know that they'll be much less correlated than they used to be relative to the stock market. I think on risk-off days, they'll be treated like risk assets, which is what they are. So it's great. It's democratized. Everybody could buy it. It's easy. But remember, what that means is the money comes out easily also. And that is a little bit of a change from where we were prior to these ETFs becoming as large as they have.
Would those outflows have been on long-term taxable gains? It was over a year. Would that have anything to potentially do with the outflows?
I doubt it. I doubt most of the money that came out of the stock necessarily went in precisely 1 year to the day, or 1 year and 1 day from the launch, but probably some. Okay. Look, we don't know how these things are going to trade relative to the market. All we can say now is they are now part of the mainstream market. They're in people's brokerage accounts, and that's got really great attributes to it, and it also has potentially negative attributes to it.